Alright guys, so let's start today's session on internal controls, internal audit and operational audit. Internal controls, internal audit and operational audit. Alright, now first of all let me tell you something about internal controls. What do you mean by internal controls and what do you mean by this concept known as internal controls? Okay, so what is the concept of internal controls? I'm going to tell you today. What is the concept of internal controls? I'm going to tell you today. Okay, so I'll give you example of one of the students of my class. So there was a student in my class itself. The student's name was Himanshu. Himanshu was the student in my class. Okay, and I used to take face-to-face classes. So in Lakshmi Nagar we had our center. So Himanshu was a student of my class. And he was one of the notorious kind of students of our classes at that point in time. Okay. Now, Himanshu used to stay in Palam. Palam is a place in Delhi. Himanshu used to stay in Palam. Palam is a place in Delhi. Okay. And we had our coaching institute in Lakshmi Nagar. Lakshmi Nagar was the coaching institute. Lakshmi Nagar was the coaching institute. Okay. So in this entire setup, Himanshu had a girlfriend at that point in time. Girlfriend used to stay in Pitampura. Himanshu's girlfriend used to stay in Pitampura. And Himanshu's girlfriend, say, we call her as N. Namita. Himanshu's girlfriend is Namita. Okay, so this was the setup at that point in time, and Himanshu's girlfriend was Namita. We had our coaching institute at Lakshmi Nagar, and Himanshu used to travel from Palam to Lakshmi Nagar daily. He used to travel, from Palam to Lakshmi Nagar for taking coaching classes of taxation. Okay, of taxation. Early morning, 9 a.m. was the time of the class. 9 a.m. was the time of the class. So Himanshu had to leave home early from Palam. He had to leave home by 7 to reach Lakshmi Nagar at 9 o'clock so that class can be taken. Now, Namita, who was girlfriend of Himanshu, had a doubt on Himanshu, that Himanshu is actually not a faithful guy. Maybe he's cheating on Namita, and therefore Namita wanted to inquire, where does Himanshu go daily in the morning at Lakshmi Nagar? Why is he going so much early in the morning? She didn't know. She was not a commerce student, so she didn't know that classes used to start early at Lakshmi Nagar. She is not aware about all those things. So she used to doubt Himanshu, that whether Himanshu used to go in classes only or not. So what she did was, she was already friend of Himanshu's sister. Himanshu's sister, name of Himanshu's sister is Himani. So Namita was friends with Himani. Himani was Himanshu's sister. Okay. So early morning, when Himanshu used to leave for the coaching classes, Namita used to call Himani and inquire whether Himanshu has left or not. Whether Himanshu has left the home or not. Himani used to say, yes, Bhaiya has left office. My brother has left office. In his motorcycle, he has left for, not office, for the classes. Okay, for the classes. So in motorcycle, he has left for classes and he is going towards Lakshmi Nagar. This is what Himani used to confirm. Okay. Now, Namita then had very close, friendship with the receptionist of Nikkhil Gupta classes. The receptionist of Nikkhil Gupta classes was by name of Shivani. Shivani was the receptionist of Nikkhil Gupta classes. So Namita used to have a good deep friendship with Shivani. So as soon as it was 8:30, Namita used to ask Shivani, please tell whether Himanshu is inside the coaching or not, whether he is sitting in the coaching or not. And Shivani used to confirm that yes, Himanshu was sitting inside the coaching and Himanshu is very much in the coaching. So yes, this was a proof that Himanshu was in the coaching itself. So yes, this was the second proof that Himanshu is in the coaching itself. Now when the coaching used to end, around 12:30 coaching is to end, Again, Namita used to call Shivani. The Shivani has Himanshu left for left for his home. So Namita used to ask this to Shivani. Shivani said yes. Himanshu has already left for home. And then around 1:30, Namita used to call Himani that whether Himanshu has reached home or not. Yes, Himanshu has reached home. Okay, so Himanshu has reached home. By this way, the entire transaction was being audited by Namita. Namita used to check the checkpoints. Checkpoints means the controls which were there with Namita. Namita used to check the internal control points, and she used to be sure that yes, Himanshu was very much in the class and he had left for the class and he had gone back to his home. This is known as checking of internal controls. This is known as checking of internal controls. As an alternative, the auditor, Namita is the auditor in this case, okay? Namita is the auditor in this case and Himanshu is the management in this case, okay? As an alternative, Namita could have employed a detective, a private detective who could, follow Himanshu wherever he is going, and he could inform Namita that yes, this person is going to Nikkhil Gupta classes and he is doing the coaching and he is coming back to his home. So a detective could also do the same function, but then detective would have been really expensive. It was expensive to hire a detective and it would take a lot of time also. So now the auditor sometimes, instead of auditing the entire transaction, like detective means you do a audit of the entire transaction. So the auditor sometimes, instead of auditing the entire transaction, they only check the internal controls, the checkpoints which are important. They only check those internal controls, the checkpoints which are important, and they are sure that yes, this transaction is okay. This transaction is not a problem. Okay. So this is internal control checking which the auditor can employ. But suppose if Namita comes to know that Himani, sister of Himanshu, is lying to Namita. If Himani comes to know that Himani is already in favor of Himanshu and Himani is lying to Namita, Himani is giving wrong information to Namita because Himani is already in favor of Himanshu, because Himanshu has promised that Himani, I will give you iPhone latest version. If you say lie to my girlfriend, I will give you iPhone latest version. So management has overwritten this control, has lapsed this control. If Namita is of an opinion, has doubt that yes, so if Namita is of an opinion that there is something wrong with the internal controls are not working fine. If Namita is of this opinion, then guys, Namita is going to take a detailed audit of the entire transaction. A detailed examination, a detailed scrutiny of the entire transaction will be conducted by Namita. That is the use of internal controls. So internal controls are usually checks and balances which are employed by the management itself to ensure that transaction is happening perfectly. Transaction is happening on time and the recording of transaction is happening on time and accurately. Transaction is happening accurately. To achieve this objective, that transaction is happening on time and it is recorded accurately in your books of accounts, the management, Himanshu in this case, ensures that internal controls are working fine. But since internal controls are employed by the management itself, management has the right and power to override the controls also, just to cheat the auditor, So now, simple as it is, what are internal controls? Internal controls in a business standpoint are the checkpoints which the management introduces for checking a particular transaction. So this is a factory. This is a factory where manufacturing happens of a particular good. This is the gate of the factory through which all the material is entered, and this gate has got a checkpoint over here. This is the gate of the factory. Factory is inside, okay. Inside the factory there is a warehouse, there is a quality control department, and inside the factory we have the place where production takes place. This is the place where production takes place, okay. So now when you purchase raw material, when the company or the organization or the management purchases raw material, the truck filled with the raw material enters through this gate, right? It enters through this gate. This truck enters through this gate, so that raw material can be supplied inside the factory. The raw material is entered through this gate. So this this gate has a register, which is inwards register, where recording happens that what kind of material has been introduced in the factory. After that, there's a quality control department. This is the quality control department. Over there also a recording is done that yes, we have received 10,000 kgs of raw material for quality check. Out of this 10,000 kgs, 1,000 kgs were returned and 9,000 kgs is in the warehouse. In the warehouse, again, there will be a book, there will be a register where detailed entry of 9,000 kgs which have been introduced as raw material will be put in. And after that, there will be an outward register entry in which they will be saying that we have issued 5,000 kgs of raw material to the factory plant, to the processing unit, so that it can be processed. So these are the checkpoints, these are the control points which control a particular transaction, and these control points ensure that all the transactions are recorded properly. All the transactions are recorded in the books of accounts properly. This is known as internal controls. So internal controls are established by the management. The management of the company establishes these internal controls, like on the gate itself there should be a register. Entry should be done on this register so that we are aware that 10,000 kgs of raw material has come inside the factory. There should be a register. Then quality control department should have a register again, which will say that 10,000 kgs have been introduced and 1,000 has been returned back. 9,000 is still there in the quality control department. There should be a register. There should be maintenance of a person who maintains this record properly, and it also feeds this record in the ERP. There should be a mechanism. Similarly, when the goods are traveled from quality control department to the warehouse, again there should be a proper recording in the warehouse so that it is ensured that the recording is happening properly. Wherever there is a disconnect, wherever there is a mismatch, for example, 9,000 goods are delivered from quality control department to warehouse, but warehouse says I received only 8,000 kgs. Where did the 1,000 kg go in between? Management needs to know that. Where did the 1,000 kg go in between? Where is the lacuna? Where is the lack? Where is the where is the leakage? Management wants to know about that. And that is how, even before auditors are there in the organization, management is able to pluck the frauds, pluck the errors, pluck the leakages which is there in the organization. So to pluck this fraud, to pluck these leakages which are there in the organization, management employs internal controls and internal checks inside the organization. This is the entire concept of internal controls. So now the moot point of consideration is that auditor is very happy when he sees good controls, because if auditor sees good controls are good, they are working fine, he is happy because his audit work is reduced. So if Namita is confident that yes, Himani is doing a good job and Shivani is also doing a good job, if Namita is confident, then she doesn't want to, then she would not want to hire a private detective. She doesn't want to go that way, or it is more expensive, it is also more time taking. She doesn't want to go that way. She will not hire a private detective to inquire whether Himanshu is whether Himanshu is engaged somewhere else or not, or is Himanshu cheating with Namita, is he cheating with Namita? So Namita doesn't want to know about it because she is happy because internal controls are working fine. So if internal controls are working fine, then auditor is happy because he has to do less work. So if these internal controls are working fine, then auditor has to do less work, he has to audit less. He'll rely on these internal controls, and if these internal controls are working fine, then he's sure that no fraud, no error, no mistake is there in the books of accounts. He's sure about that. This is the relevance of internal control in any organization. And what is internal audit? Internal audit is nothing but checking whether these controls are working fine or not, whether in the entire organization these controls are strongly working, they are working in a good enough manner, they are working fine. This is to ensure that internal controls are working fine in the organization. Internal audit is taken place. So if you understood the basics of internal control, internal checks, please write yes in the chat box. Please write yes in the chat box if you are well versed with this concept of internal controls, if you understood what do you mean by internal controls and why does management institute these internal controls in an organization. बहुत ज़्यादा अच्छे से. Okay, so what are internal controls? Internal controls are certain checks and procedures Very, very important line. Please highlight over here. It is installed by the management. The internal controls are installed by the management. Management is the one who installs the internal control. So these are checks and procedures which are installed by the management. Management installs these checks and procedures to prevent error, irregularities, financial frauds, and misappropriation of assets. So many times, guys, our raw material is stolen by our employees itself. Employees are involved in stealing raw material. So if employees are involved in stealing raw material, then we will be able to know if internal controls are working fine. Who is stealing the raw material? Who is the one who is responsible for leakaging the raw material? Okay, so misappropriation of assets is also controlled by internal controls. In other words, internal control system can be defined to be policies, practices, procedures, tools designed with the following objective. What is the objective? Objective is that every transaction must be executed with proper authorization. Proper authorization should be there to execute any transaction. For example, if quality control department says that no, 1000 goods, 1000 worth, 1000 kg goods are not good, then this 1000 kg goods which are rejected, they should be rejected with the signature of head of quality control. The head of department of quality control should sign this voucher which says that 1000 kgs is reject. We are not accepting it's quality defective is there. So we return these 1000 kgs. It should be with the approval. Proper authorization should be there for each and every transaction. So that tomorrow quality check department doesn't say that, oh no, we never rejected any goods. We accepted all the goods. We never rejected any goods. This should not so happen. Okay. So every transaction should take place with proper authorization. That is the first requirement of internal controls. Then all the transactions are promptly recorded. Promptly means timely recorded. So the transaction should be timely recorded. There should not be delay in recording the transactions, because if there is delay in recording the transaction, then accordingly there will be delay in producing the books of accounts also. So promptly the the transaction should be recorded with correct amount. Amount should be correct. Quantity should be correct. And in appropriate accounts, books of accounts should be appropriate, ledger accounts should be appropriate. There should not be any error in the ledger accounts in the accounting period in which it was executed. So accounting period should also be correct. The date of the entry should be correct. When this transaction take place, that should be also correct. Because if you deviate the date of any transaction, then if it's a transaction which is recorded in foreign exchange, then the currency rates might fluctuate. Okay, so date should also be correct. Then assets are safeguarded. Very, very important, guys. Usually there is a very big problem with all the multinational corporations and Indian corporations also. Their assets get stolen. Their assets gets leaked. Yes, there's a very good amount of leakage which happens even in PSUs. In PSUs, chair, table, office furniture sometimes gets stolen. And sometimes the internal employees are involved in it. Raw material gets stolen. Finished goods get stolen. So all these things get stolen. So asset safeguard is one of the major, major objective of internal controls. If internal controls are strong, forget about auditor. Okay, forget about auditor. We are not bothered about auditor right now. We are bothered about our company right now. Management is bothered about our losses, the losses which the company will incur because of this default. We are just bothered about the losses right now. We are just bothered about our own assets right now. We should not be at a loss. The company should not be at a loss. The management should not be at a loss. That is the main thing of consideration right now. So the main objective of internal controls is to safeguard our assets. Our assets should be safeguarded. Our assets should be, protected from any leakage, from any stealing, from any, unauthorized access, unauthorized use. The assets should be safeguarded. That is the main thing which internal controls aims at. Because if internal controls are not there, then we will have no control, because our assets move around the organization very frequently. We have no control over where is it moving. No one will take responsibility tomorrow if the assets get stolen. No one will be able to take the responsibility that who had stolen this assets. So that is why internal controls are very, very important. Wherever the assets are moving in an organization, a proper record, a proper entry, double checking of the entry should be there. It should be there. Okay. So safeguard asset is really important objective of internal controls. The recorded assets shall be compared with the existing assets at a reasonable intervals. This is known as physical verification of assets. So company is claiming that I have 10 vehicles in my organization. In the books of accounts, there are 10 vehicles which are written in the organization. In the books of accounts, that company has 10 vehicles. But when the auditor asks them where is the vehicle, then maybe 9 vehicles are there. The 10th vehicle is standing at the house of the director. It's director's personal vehicle. It's not company's vehicle. It's director's personal vehicle. This is a problem. So auditor should always physically verify the assets. Auditor should always go to the factory and see what all assets are there. If the company is claiming that I have assets worth 100 crores, auditor should go in the factory and check whether assets worth 100 crores are present in the factory or not. This is the role which auditor should definitely fulfill. So the recorded assets are compared with the existing assets at reasonable intervals. So physical verification of assets should take place and appropriate action is taken where any differences are there. Measure compliance with corporate policies and regulations. So whatever corporate policies have been created around a particular transaction, that approval is required, this person should approve the things, it should be checked, quality should be checked before anything is taken. Whenever the goods are being sold, then again quality check should happen. So all these policies should be adhered to. All these policies should be followed. Should not so happen that, oh, we had an urgent order to process, so we did not get the quality check done. No, it is not possible that without quality checking any goods are transferred outside the factory. It's not possible. Without quality checking, nothing should happen. Even if it's an urgency, quality check should be there. This is an internal control. So we should ensure, the internal controls ensure that whatever compliances are required, internal compliances, not external. We should comply with the corporate policies. Corporate policy should be in tandem with the compliance. Early warning system. So internal controls acts as an early warning system. If any control is weak, if any of the area is weak, then it is an early warning system that in this area some kind of fraud can happen. Some kind of fraud can happen in this particular area if something is weak. So I'll give you an example. In our example itself, suppose if the management does not have this system of recording the raw material in books of accounts, they do not record their material in books of accounts, not books of accounts, but these records are not maintained. Suppose there's a high chance that material which comes inside the factory is 10,000 kgs and material which goes to the shop floor is only 5,000 kgs. 5,000 kgs of raw material is leaked in the process, and you would never know. You would never know where was the raw material leaked, because raw material first of all came inside the factory. So what if raw material only worth 8,000 kgs came inside the factory? It was not 10,000 kgs, it was 8,000 kgs which entered the factory. You will never know about it because you don't have any internal control, you don't have these registers, you don't have recordings. So simple thing is that if internal controls are not there, then the susceptibility of fraud, susceptibility of error increases. There's a high level of error which can sail through in our books of accounts. So the internal controls act as an early warning system that yes, this area is weak, this area is little a little dicey, this area is little risky, please take care of this area. So early warning system. Problems are easier to fix when you catch them early. Prevent frauds. Of course it will prevent fraud because there are multiple checks of one thing only. It is being checked at every point. Okay, at multiple points it is being checked, multiple check, and fraud is much more difficult. So guys, one more example which comes to my mind. If you have ever gone to an airport, okay, especially if you've gone to Delhi Airport, Indira Gandhi International Airport, then in the airport there is multiple layer of checking which happens. First of all, at the entry gate itself, you have to show your Aadhaar card, you have to show your tickets, you are flying to which country, you are flying to which state, you have to show them to the body, to the guards, and then only they permit you inside the airport, so that no unauthorized person can get inside the airport. Then even inside the airport, you are again faced with multiple checks. Okay, at the counter itself, you want to show your ID, or you are asked your ID, what is your ID, you are shown your passport, you show your Aadhaar card, you show your tickets, again you show all these things to the person who's at the ticket counter, the counter at which you give your bags, right? Then again during security check, you again show the validity of your identity. Then while going inside the plane also, you show your identity. Okay, so multiple layer of identity checks happens, and this ensures that no unauthorized person can enter the airport, no unauthorized person can enter the the airplanes, because if unauthorized person enters the airplanes, then it will be a mess, it will be a chaos. So very, very important. that it prevents fraud. Avoid external audit findings and regulatory fines. So external audit findings are avoided because, you know, the best thing is that, you know, before the auditor comes, you should have a good system inside your organization which ensures that there is no fraud before even the auditors is coming. So before even the auditor is coming, you ensure that your organization is, you know, well versed, your organization is fully equipped to avoid errors and mistakes and frauds. They are your books of accounts are clean, they are devoid of any error, and if any error and mistakes come in, you already at a very early stage you catch those errors and fraud. You need to ensure this, and when you ensure this using internal controls, then even external auditors are satisfied. There are no external audit findings and regulatory fines are not there because there are regulations which says that your internal control should be strong. If they are weak, then you are faced with fines and penalties. You avoid those fines and penalties if your internal controls are strong. It always best to find and fix a problem before an external entity discovers this. External entity means the auditors or regulatory bodies. They should not find the irregularities, okay? Regulatory bodies. So you should always fix the problem before the external or the, you know, regulatory body finds about it. They should not be able to find about it. You should fix them earlier. Internal control should be well in management's hand, management's control. Responsibility for internal control. As per Companies Act 2013, in a limited company, the board of directors are responsible for internal controls, okay? So internal controls are in place, they are working well, they are not, you know, broken by the management itself. This is duty of the board of directors. Board of directors are liaised with this duty. Your internal controls should work well. Auditor will just check them, and if auditor is satisfied, then it will rely on them. The duty of installing internal controls is not of auditor, it is of the management. Management should ensure that all these books are kept properly. This book, this recording is happening properly. The auditor should just check it. Management should ensure that these are working fine. Management should work them fine. Okay, so responsibility of internal controls are with the management, board of directors. Scope of internal controls. What kind of internal controls are there? I'll give you example of one of the internal controls which are related to raw material, but there are several kinds of internal controls which are there in an organization. So what are the types of internal controls? Types of internal controls, and yes, it's an important theoretical topic, guys, because it can come in the examination. Number one is administrative control. Administrative control means the controls which are related to administration of a particular organization. The managerial controls which are surrounding the administration of a particular organization. What do you mean by administration? I'll tell you an example of administration. Okay, now guys, we have telecallers in our organization. We as a coaching institute, we have telecallers. We have callers who are calling students, and they are asking whether you want these classes or not. And you also might have received calls from various coaching institutes asking you whether you want classes for group 4, whether you want classes for group 3, whether you want classes for group 2. These interactions you would have done in your intermediate as well as final level. You would have been contacted by the telecallers. So these telecallers are employees of NGC, and they call students and they just inquire whether they want the classes or not. Now there are telecallers who are there in the office, and they would tell me at the day end that, sir, we called 100 students today and no one purchased the classes. They would tell me that. And when I did check their mobile phones, there was not even 10 calls which were made. So they wasted the entire time. Now I want an internal control. I want a check where the telecallers are actually calling the students, and I'm aware that they are calling the students. I want such a software. So what I did to install this administrative control was that I installed a software on the mobile phones of the telecallers. All the telecallers, in their mobile phones, there was an app, and that app gave me details of how many students were contacted, how many picked up the call, and for how many minutes was the conversation happening, and the conversation was also recorded in the phone itself. Now I have a proof that no, you did not call 100 students. You are lying, because the software is telling me you only called 10 students in the entire day, and you talked with the students, they did not convert, but you did not call 100 students. So why didn't you call more students? Why did you call only 10 students? That will be my question to the telecaller. So this is an administrative control. This is an administrative control which I will, as a management, install to ensure that work is happening in my organization, because I don't want my sales team to sit idle and do nothing. Okay, I don't want that. That's the last thing which I want. So it's really important to have administrative controls, like, you know, the salesman, whosoever customer is contacted by the salesman, he should maintain a record of whosoever is contacted by the salesman. And wherever there is a follow-up required, that, you know, after 2 days you'll call back, you'll call that person back, that follow-up is also, you know, to be done by the salesman. So this entire procedure is to be, you know, done in an effective manner, and I have to supervise it. I have to install a control. I have installed the software inside the mobile phones of the telecallers. This happens regularly. Yes, Nidhi is aware about these details quite in detail, huh? Okay. Then next is operational control. What do you mean by operational control? Operational control means the operations which are carried out in any organization. Like, you know, I have operations in my organization as well. So what are the operations? Operations are that, you know, I get calls from you guys for resolving software related problem, for resolving logistics related problem. You have not received your book, your classes are not working well, or your book is old and your classes are not matching with the book. Any kind of problem which you face, I have telecallers, I have after sales support who is giving you, you know, a solution to your problems. Now the point is that, you know, all the calls are coming in together, and you never know which call is directed to where. Which call is related to logistics, which call is related to, you know, sales, which call is related to after sales services, which call is related to software. We are not aware about it. So it's a chaos. One person is dealing with software also, sales also, you know, book also, logistics also. So everyone is dealing with everything. To overcome this problem, we have an operational control, and the control is, as soon as you call my classes, first of all, your call will be transferred to the relevant department. If it's logistic, then they will tell you, you please call on this particular number for logistics, or we will transfer your call to logistics. They will tell you. If it's a book related issue, then they will transfer the call to relevant department. If it's a you know, class related issue, your software is not working on your mobile phone, then they will transfer the call to the relevant department, IT department. This is known as a procedural control, which ensures that all the procedures are, you know, going fine, and all the procedures are working good, and there's no chaos inside the procedures, and we are able to manage things well. Plus, this also includes budgetary controls, like we have budgets for our capital expenditure, operational expenditure. We finalize budget for our operational expenditures, that, you know, this is the operational expenditure, and you know, budget for this is this, right? Now we need to ensure that that budget is met. The employee should not overrun the budget. So, you know, there was an offsite which happened in my office recently, and we all went to Manali. Okay, suppose we went to Manali. The budget was that the per employee expenditure should be not more than 20,000 rupees. 20,000 rupees was the budget which was given to the employees. Now we need to ensure that that expenditure is within that budget. We need to ensure that. We need to control that. So I had to maintain a Splitwise. There's a software called Splitwise. That was software which was installed on each of the employees' mobile phones, and whatever expenses they were incurring on behalf of the office, it was recorded in that Splitwise, and I had the master account of that Splitwise. I had the dashboard of that Splitwise, and whatever expenditure was happening, it came to me, notification came to me, and I used to approve all those expenditures. And whenever I thought that there is an extravagant expenditure, I would reject it. I would tell the employee, don't do this expenditure, it will be from your own pocket. So this is a sort of a operational control. Budgeting, standard costing, all these are parts of operational control. Then financial and accounting control, very, very important. We want all the accounting entries to be recorded on time in the correct manner. We want that. We want data of all the accounting entries to be recorded in our books of accounts on time. And one of the very good examples of a financial control was this, that whatever raw material is purchased, I have a control that how much raw material has entered the factory, how much has passed on the quality check, how much is in the warehouse, how much is on the floor. I have this entire control. As a CFO of the company, I am worried about my inventory. Where is my inventory? Where is it kept? If there's any fault, where is the fault? How much is returned? Because I have to pay to this person also. I will not pay him completely if the material was returned because of a reject. I need full control of this entire transaction of raw material purchase. Similarly, sales which have happened outside my factory, I want control of those sales also. So even for sales, in warehouse the sales material would have been kept, and then that sales would have moved to first quality control, quality check would happen, and then from the gate it would have exited. So gate should also have a register, sales register, purchase register, sales register. So similarly, just like purchases were recorded at each step, sales should also be recorded at each step, so that I am aware as a CFO how much sales is happening on a day-to-day basis. Where is my material kept? Where is my finished goods kept? At what stage is my finished goods there? I should be aware about it. So these are accounting and financial controls which are there in an organization. Financial and accounting controls which are there in an organization. This control refers to primarily the management plans, objectives and procedures that are concerned with safeguarding of asset, prevention and detection of fraud and error, accuracy, completeness of accounting records. We want our accounting records to be absolutely accurate. And if there's any deviation from the normal accounting, we want to know the reason. If goods are returned, suppose, from the quality control desk, we want to know why are the goods returned? Why? We want to know about it. So it's very important to maintain a good control, because as a CFO, I want to know about my transactions. And controls will only ensure that I know about my transaction. Then there are compliance control. Compliance means legal compliances, like TDS should be deposited on time, income tax should be deposited on time, GST should be deposited on time. So there should be some controls that prompts us for the compliance dates whenever they are coming closer to us. Okay, so many companies are doing this, and I have personally seen many companies doing this. In their ERP, in their softwares, accounting softwares, they have alarms. Yes, the alarms ring as soon as some date is nearing. For example, TDS deposit date is 7th of the next month. So on 5th of the next month, the alarm will start ringing and pop-up will come on the screens of the CFO, of the senior manager, of the manager, all the finance department employees. A pop-up will be coming stating that TDS due date is on 7th. Please fill the TDS detail. And unless and until you fill your TDS, you file your TDS and you deposit your TDS, that pop-up will not go down. It will only go down once you confirm that yes, we have deposited the TDS. Similarly, on 20th of the next month, GST deposit date, right? There will be a pop-up that GST due date is here, GST due date is here, GST due date is here, and that pop-up will come as a GST due date, a reminder to you. And unless until you deposit your GST, that pop-up will not go. This is again a compliance control. To control that compliances are to be done on time, to control this fact, this compliance control mechanism happens. And it can happen with any a company, it can happen with any country, it can happen with any any kind of compliance, not only GST or taxation related compliance, even provident fund. Okay, you have to deposit provident fund on time, you have to deposit ESI on time, you have to deposit all these statutory dues on time. So a pop-up will come as a compliance control for all these statutory obligations. For all these compliances, a pop-up will come, and that pop-up will ensure that you have deposited your statutory dues on time. So that is the compliance control. Then what are the types of internal controls? How many internal controls are there? So guys, these were the scope of internal controls. Okay, these were the scope of internal controls. Internal controls can be of these broad categories. Now we have types of internal controls. What are the types of internal controls? So there are three types of internal controls. First is the detective control, second is the preventive control, and third is the input control. Okay, so as you've already you must have heard about this saying that prevention is better than cure. So preventive controls are controls which prevent us from doing some error or irregularity. This is known as preventive controls. Controls which ensure that we do not do any mistake, like compliance controls are preventive controls. When pop-up comes on your screen that TDS due date is 7, please report the TDS, it's a preventive control. We don't want you to fault on the TDS deposit, therefore we are in advance telling you that please deposit TDS on time. This is a preventive control. Then some controls are detective control, where error has already happened. If you want to know where is the error, then detective controls are installed. For example, bank reconciliation statement. You have done some wrong entry in the bank by mistake and you are not aware about it. Bank reconciliation statement will call out that error in your books of accounts. Bank reconciliation statement will not tally if there's an error in recording your cash transactions or your bank transactions. So if you have done a sale of 5 lakh rupees through bank and you have missed booking it in your books of accounts, bank reco will not tally. Bank reco will say that 5 lakh rupees worth of funds are not found anywhere. Accounts in books of accounts entry is not there. And you have cash in your bank account. So these are detective controls. If any error has happened in the books of accounts, these controls will ensure that that error is pinpointed and that error is highlighted in front of the management of the company. So these controls are used to detect the errors or irregularities that may have occurred. Examples of detective controls are internal audit, reconciliation of financial reporting, financial statement, and physical verification of assets is again a detective control. So they are preventive controls, they are detective controls. And third one is the input controls. Now these are very common mistakes that happen while inputting the data in the books of accounts. I'll give you a very simple example, okay? I did an expenditure worth rupees 10,000 in repairing this particular digital board. This is a digital board which I got repaired. 10,000 rupees was spent. By mistake, my accountant, instead of punching in 10,000, he punched in 1 lakh, 10 extra. By mistake. This mistake can happen with anyone, guys. This mistake can happen with anyone. This is an input mistake. Input mistake. Transaction is okay. Transaction is not a problem. Bank, everything is okay. But while putting this transaction in the books of accounts, you did a mistake. This is known as input mistake. And in case of input mistake, we need to have input controls. Input should be controlled. Sir, what can be the control in this case? I mean, if error has happened, then that person, is not aware about this error. So what, what can be a control? There can be a control. Control is that every person who's doing accounting in the books of accounts, his accounting should not, directly be fed in the books of accounts. It should be checked by another person, his senior. His senior should check the accounting entries which he has done. And only then senior should approve the accounting entries which should go in the books of accounts. So this double checking will ensure that input controls are there and input is fed in the books of accounts on time. Input is accurate, input is okay. This will be ensured only and only when someone is checking the books of accounts which are prepared by one person. So books of accounts which are prepared by one person, that should be checked by another person. Inputs should be checked by another person. Accounting entry inputs, whosoever is doing the inputs in the books of accounts should be checked by another person. That should be the mechanism. So these are the input controls. Input controls means that procedure and systems to ensure completeness, accuracy, existence and validity of the data entered in the financial statements. So the data which is entered in the financial statement should be accurate. Double check, get it double checked by someone else, get it double checked by a senior. To ensure successful internal control system, the factors which are to be considered, and this question came in 2025, a recent one. The factors which are to be seen to ensure successful internal control system, that internal control system is working fine. What are the factors which we need to see, which we need to really take care of? Segregation of duties. One transaction or one entire chain of transaction should not be held by only one person. I'll give you a very simple example. My organization, my office usually requires laptops to be purchased. So I send someone to the market, he purchases the laptop, he comes back in the company and claims the amount. This is the usual procedure which happens. But I realize that the person who goes to the market and who purchases laptop, he purchases laptop worth 60,000 for 80,000. And 20,000 is his commission. So that person, when he goes to the market, he will, tell the shopkeeper that, look, shopkeeper, this laptop is worth 60,000, but you give me bill of 80,000. You take 20,000 extra from the company and you take 20,000, you give 20,000 to me. This is kind of corruption which can happen in any transaction. To stop this corruption, to stop this, fraud from happening, to stop this error in the transaction, what I'll do is, I will never ever send one person to market. I will always send two persons to market. Or the person who's going to market, another person should call up market and check whether the price is same or not in market. Segregation of duties. I will have two or more people doing one transaction. Yes, it will entail more cost and efforts, but it will have a controlling effect also. So duties should be segregated. One person should not be able to perform the entire transaction. It should be done by two people. So the person who's going to the market, he should not be the same person who's getting quotes from the market. some other person should get quote from the market, some other person should go to market to purchase the laptop. There should be two people who are involved. So segregation of duty is a must. Segregation of duty should definitely happen. So the first and foremost element of internal audit, internal controls is duty should be segregated. It is necessary for successful internal control system that no one person handles the complete transaction. One entire transaction should not be undertaken by only one person. There should be multiple persons who are taking care of one transaction. I'll give you another example. There are many fixed assets in the organization, right? Now to maintain those fixed assets, we need someone who can verify the fixed asset and record them in the books of accounts, okay? This should not be one person. Because if it is one person, then he might sell those assets in market, fetch money and tell to the organization, no, the goods are there. I'll give you an example, okay? Suppose a company has 100 chairs inside the company. It has 100 chairs inside the company. Now, there can be an employee who sells off 10 chairs in market and takes money. Now, there are 90 chairs in market. Now, there are 90 chairs in office, right? But this employee would report that, no, there are 100 chairs. I have counted there are 100 chairs. He will report that because 10 chairs has been sold by him in market. Company's assets are being sold by employees in market to fetch money. This is the fraud. And what will he report? He will report, no, there are 90 chairs. I've seen there are 90 chairs. Many employees can do this. What is the solution? Solution is rotation of duties. Rotation of duties means if physical verification is done by employee A for the first quarter, for second quarter, it should be done by employee B. It should not so happen that one transaction is taken place by one employee only every time. No. Employees should change so that if earlier employee has done some fraud, has done some leakage or some kind of miscompliance, that should come to light. That should come to light. So next important internal control element is rotation of duties. No single individual is responsible for all stages involved in a transaction. Duty should rotate. If one person is cashier in the 1 month, in the next month, other person should be the cashier. In the third month, other person should be the cashier. Cashier roles should change every month. If there's only one cashier who's, the cashier for every month, then quantum of fraud is going to increase like anything. Plus, there should be CCTV cameras over cashiers, and you would have seen them. Over cashiers, over the cash counters, there are CCTV cameras. The CCTV camera should definitely be there. It's a very good control. CCTV cameras are very, very good control. Okay. So, yes, rotation of duties is a must. Competent and integrity of people. So, for critical transaction, the competent and integral people should be appointed. So, cash related transaction, even cash collection, all these should be done by competitive people and people with integrity. People with integrity. And usually, educated people have got some bit of integrity, guys. Okay. Like a cost accountant. A cost accountant will never do such activity that will jeopardize his degree, because only a cost accountant knows how much effort did he put into acquire that degree. So cost accountant should be given critical task, should be given task of accounting, maintaining books of accounts and doing the entry, because he will not do some hanky panky stuff, because he is very aware about how difficult was it to get the degree. So yes, integrity of people and competence of people should be there who are actually doing that work. Now, even in case of accounting entries, if you employ some science graduate in putting accounting entries, he will not know the rules of debit, what comes in, credit, what goes out. He doesn't know that rules. He doesn't know accounting. He doesn't know balance sheet. He doesn't know profit and loss account. How will he be able to do the accounting entries? So again, you have to take care that whosoever are you making responsible for putting in accounting entries, he should be a competent person. He should be a cost accountant, he should be a chartered accountant, or at least a commerce graduate. So competent and integral people should be there. Appropriate level of authority. So every person who's been given some kind of work, he should be given some authority also, okay, for accomplishing that task. So if I'm given the authority of physical verification of fixed asset, you please count all the fixed assets which are there in the organization, then I also should have authority to visit each and every department and summon the heads of the department to show you the fixed assets. So he should be visiting each of the departments. He should be able to be responsible and should be authorized to visit each and every department. That should be very much there. So authority should be given to each and every person to visit departments if responsibility is given. So appropriate level of authority. A common error usually made is to grant too much authority within control boundaries. However, controls to be effective require authority to be granted on a need to have basis. So appropriate level of authority should be there, okay? Commensurate with the responsibility. Appropriate level of authority should be there. Accountability. Internal controls to be successful presuppose that there is full accountability for all the decisions taken. Everyone should be accountable for their own work. So accountability is one of the most important factors of internal controls, that who is accountable for this job? That should be one person. Like in my example, the quality control head should be responsible of quality control rejects. The quality control head of quality control should be responsible. So he is the responsible person. If anything wrong goes in quality control department, head of quality control shall be the responsible person. If anything wrong goes in the warehouse, then the caretaker of the warehouse should be the responsible person. So it depends who is the responsible person. You have to fix the responsibility of each and every person for doing that particular job in an internal control. So that responsibility fixation should be very much there. Adequate resources, yes, to perform any job, to perform any activity, adequate resources should be provided. You are telling me that, okay, you go and do physical verification of the assets and you are not giving me authority to even, you're not giving adequate resources. There are so many fixed assets, you are not giving me staff. How can I individual count all the assets of the organization? I'm an individual person. How can I count all the assets of an organization? There are so many assets. There are 10,000s of assets in an organization, ranging from chair, table, laptops, digital boards, projectors. There are thousands of assets which are there in an organization. How can I count all of them alone? I need resources. I need manpower. I need accounting softwares, adequate controls, adequate softwares. So adequate resources should be given to person who's given that authority. So controls are enforced with inadequate resources will generally fail. So if there are controls which you have employed but they do not have adequate inadequate resources are not there, then the controls will fail whenever they come under stress. Therefore, it is necessary that minimum resources necessary to enforce the controls must always be present. So there should be minimum resources which are used for effecting that control. Those minimum resources should be there. So if you have given me responsibility of counting the fixed asset, then you have to give me at least 5 staff. I need 5 staff. I need bare minimum 5 staff. And you're telling me that you count physical assets every month. Then I need 5 staff every month. Every month I need 5 staffs. Okay. Then supervision and periodical updation. So controls are not something which are just, you install them and you forget them. No. You have to check them at every interval, at every point in time, whether they are working fine or not, whether they are really actively working fine or not. You have to check your internal controls each time. Okay. So, initially when you have this control that, you record all the transactions which take place in the quality control department. Initially, everything was getting recorded. Okay. But after 2 months, nothing is getting recorded. After two months, nothing is getting recorded because, initially everyone is excited that, oh yes, we'll follow this internal control. But after 2 months, everyone's energy goes down. So after 2 months, you realize that there are no recording which is happening in the quality control department of that organization. So whatever controls you install, it requires periodic supervision. It requires periodic check. You should be able to, check whether the controls are working fine or not periodically. That check is required because controls become loose over a period of time. Okay. So you need to periodically check the controls, supervise the controls and update them wherever required. Alright, what are the limitations of the control? Internal controls come with their own limitations also. There are some lacunas, there are some problems with the internal controls. Internal controls do not come with unlimited validity. There are some problems also which are there with the internal controls, and the first problem is that they are costly. It's not easy to employ the internal controls because they are costly. Think about a situation where I am employing 2 people for doing the same thing, double the cost, double the salary I am paying, just because so that they can check each other's work. I am paying double the salary. Cost is increased. So internal controls come with their own cost, because if internal controls are to be superb, they have to be costly. For example, that software, remember that software which I installed in my telecaller's phone to tap all the calls which is done by the telecaller. That software is expensive. The license is very expensive of that software. I need to buy those licenses of that software. I need to buy the software to be installed in my business. It is an expensive affair. It's not, cheap. It's not cheap at all. It is an expensive affair. So to have the softwares which control your organization, to have systems which control your organization, it's a costly affair, and cost benefit analysis must be undertaken before you incur this kind of a cost. Next, no control for unusual transactions. So if there are unusual transactions which take place, there is no control that can measure the unusual transactions. So if a transaction is very rare, if a transaction is something which is unusual, that can skip the entire internal control. Like I give you an example. We have already talked about Himanshu, right? We have already talked about Himanshu in our earlier example. Now Namita is the auditor of this transaction, is taking due care that Himanshu leaves home on time. He goes to the organization, the coaching institute on time. He leaves coaching institute on time and he reaches home on time, to ensure that Himanshu is not meeting some other girl during the way, or Himanshu is not double dating, or he is not cheating on Namita. To ensure this, Namita is relying upon the internal controls. But you know what? Himanshu is already dating a girl inside the classes. So there's a girl by the name of, say, Nidhi. Himanshu is already dating Nidhi inside the coaching institute. And Namita is satisfied that yes, Himanshu is not cheating on me. Himanshu is going to coaching and coming back on time. But actually, Himanshu is dating a girl inside the coaching institute. Yes. So this is an unusual transaction which cannot be found out by these internal controls. Even when internal controls are working fine, then this unusual fraud cannot be found out by Namita. Namita can never be able to, find out this fraud, that Himanshu is dating someone inside the coaching institute itself. Himanshu never wanted to do CMA. He never wanted to, pursue CMA as a career option. But he enrolled in CMA and he enrolled in our classes just because of that girl who was doing CMA. This was the crux of the matter. And Himanshu is also dating Namita from Pitampura. So he's double dating. He's cheating both the girls. But internal controls have not been able to find out this fact, because this is an unusual transaction which even internal controls are not being able to catch it. So sometimes internal control fails because the transaction is unusual. Transaction is, very rare, very strange transactions are there. And therefore, in that situation, guys, even the internal controls fail. Even the internal controls don't work well when there is an unusual transaction. So this is a problem with the internal controls, that no control for unusual transaction. Most of the controls are designed for usual transactions. They do not tend to be directed at transactions of unusual nature. Hence, controls would be ineffective wherever there are unusual transactions. So we were assuming that just by controlling movement of Himanshu, we will be able to tell that, Himanshu is not cheating on Namita. But that was not true. Even after tracking the movement of Himanshu, Himanshu was cheating Namita. That was the fact. Okay, then human error. Yes, human error can render internal controls ineffective. Human error can render internal controls absolutely, internal controls can lapse, because human error is something which is non-stoppable, unstoppable. Human controls are unstoppable. Human controls are, human errors is always there. So wherever there is human error in implementing the in implementing the control, then internal controls will not work. If the person who's employing the control is not employing the control well, then it will not work. So I'll give you an example, okay? Someone went to purchase the raw material, my laptop. I asked someone to purchase laptop. Laptop was worth 60,000. But that person was inflating the invoice. He was saying that, no, please give me invoice of 80,000. I will claim 80,000 from the company and 20,000 is my profit. That is what my employee was doing. Okay? I told another employee to please go with the employee and check whether he is doing right or not. So I sent 2 employees to the laptop store to ensure that this transaction happens properly. What happens is the second employee, the first employee tells the second employee, oh, I'm just getting the laptop. You please go and eat something. You eat some golgappa in the market. You eat some paniyaram in the market. The second employee went to market for eating something. And in the meantime, the first employee did the fraud. So it's a human error now. I as management took adequate care that I installed good internal control system and I have segregation of duties and I have rotation of duties. But that foolish second employee broke my internal control. Internal control was not effective because of that foolish second employee. He could not understand the relevance of him going with that particular employee. So sometimes due to human error, sometimes due to human foolishness, the internal controls can break down, the internal controls can come to a lapse. This can very much happen, in case of human errors. Then collusion among the employees. Collusion means when two employees shake hands. When two employees shake hands. So what happened is, I sent two employees to get laptops, okay, and both the employees shook hand. Both the employee had an agreement that we will buy a laptop worth rupees 60,000. We will tell boss that it is for 80,000. 10,000 you keep, 10,000 I keep. So even after segregation of duties, even after rotation of duties, my control falls flat. My control breaks down. Why? Because the employees shook hand. Both the employees agreed that we will do this fraud together. So sometimes internal control lapse because employee does the fraud together. However, the chances are rare, because at least one of the employees should be loyal to the company. One of the employees should be imandar, but none of the employee was loyal. So if collusion of employee happens, if employees shake hands, if employee agrees, if they agrees to do the fraud, then obviously guys, the internal control will also lapse. Internal control will also not work in that case where collusion among the employees happen. Abuse of authority. Sometimes the management abuses their authority to have the internal controls. So I'll give you an example, okay. So sometimes what happens is, there's an internal control which is there in the organization, that whenever a good will come in the organization, first it will be recorded in the register of the gate, then it will be recorded in the quality control register, then it will be recorded at the warehouse. Some goods come in the organization, and in very, very great hurry, I want those goods to be in the factory as soon as possible, as soon as they enter. So as management, as the managing director would instruct the gate, no, don't record right now, let the goods be entering the factory. No, don't record. Quality control, you don't record, you please, and let the goods enter. No, warehouse, you don't record because we don't have time, you please issue the goods to the factory. So sometimes management themselves override controls. Because of their authority, they abuse controls. They don't let the controls happen. They abuse the control sometimes, because management is in a very, very powerful state to even override controls, because management have themselves installed the controls. I'll give you another example in our Himanshu's case. Himanshu is a very smart guy. He's not sweet a guy. He's not very Sharif kind of guy. He is very cunning. Himanshu is very cunning. He already knew that Namita will be calling her sister. He knew that Namita will be calling the receptionist. So what he did was, he bribed Himani, her sister, by the iPhone, and he bribed Shivani with a dairy milk silk. He said, Shivani, I will give you dairy milk silk. You please tell Namita that I am very much in NGC only. He will bribe both of them because he is management. He is overriding the controls, okay. He will bribe both of them, and then the controls will fall. So internal controls have this big problem that management can anytime override the control. Control can be devastated anytime, and by such cunning people, the controls can be overridden. He can tell Himani, please don't say whatever I am asking you to say to Namita. You please say that. Don't say the truth. I will give you iPhone. And he told Shivani that you also don't speak truth to Namita. I will give you dairy milk silk. You please speak lie to Namita. So management has got this power to override control. That is one of the very major problems with internal controls. Internal controls are not successful because management has got a lot of power. Management has got a lot of power to override control. It has got authority. Management has got authority to just devastate controls. That is a problem with internal controls. The possibility that a person responsible for exercising controls, which is the management, could abuse that authority. For example, member of management overriding the control. Management itself would not, follow the controls in some urgent situation. That is the problem with internal controls. Next is inadequate procedure. When the controls are not, put with adequate procedures, the compliance are not adequate. The procedures which are installed for, the controls, internal controls, they are not adequate. Then again, there's a problem. The possibility that procedures may become inadequate due to changes in conditions and compliance with procedures may deteriorate. So sometimes conditions change, and when conditions change, if internal controls are not changing, then guys, the situation is going to deteriorate, the situation is going to be bad. So with changing times, your internal controls should also change. If time is changing, then your internal controls should also change. That is a very important aspect of internal controls. Okay, sir, got it. Now, where do you have to report the internal controls? Usually, what are the statutory requirements where the internal controls are reported, where the internal controls efficiency needs to be reported? Because internal controls are not only important for management, they are not only important for auditors, but they are also important for the shareholders. They are also important for Government of India. Because if Government of India comes to know that this company has got weak internal controls, their revenue is not recorded properly in their books of account, then taxes will not be recorded in time. They will also be fault in taxes. So internal controls are not only important for management and auditor, but also for Government of India, also for shareholders, also for other stakeholders of the company. So at various statutory levels, a disclosure is required to be made whether internal controls are working fine or not. What are those statutory levels? That is what we are going to study now. Alright, now let's come on to the internal controls and their statutory requirements. So which all law require internal controls to be reported, and statutory auditors where they need to report on the internal controls. Now, there is a report called the CARO 2020, Companies Audit Report Order 2020. This requires the statutory auditor of the company, the stat auditor of the company is required to report whether there is an adequate internal control system in the organization or not. So this is the first place where the statutory auditor needs to report that whether the internal controls are working fine or not, whether internal controls are working appropriately or not. This is the first statutory requirement which is required for the internal controls. Second, the auditor shall include a written communication of significant deficiencies in the internal control, including description of the deficiencies and explanation of their potential effects under Rule 18(3) of the LODR rules. So according to these rules also, the internal auditor needs to report on the deficiencies. If there is any deficiency in the internal control, if there is any deficiency in the controls which are installed, the auditor needs to report about these deficiencies in this report. Okay, now guys, how would the internal auditor know that there's a deficiency? The statutory auditor will know that there's a deficiency because he will test the controls. He will test the control. Soon as he comes in the organization, he will test the controls, and after testing the controls, he will understand whether there's a deficiency in the controls or not. So he will test the controls. Okay, you are asking what is LODR? This is a listing obligation. It is a SEBI regulation where all the companies which are listed under SEBI, they are required to inform about the internal controls and deficiencies thereon. This is a listing obligation document which is there. Okay, these are rules which are relevant to the listed companies. These are regulated by SEBI. There also internal controls are required to be verified by the statutory auditor. Subsection 5 of Section 177 of the Companies Act. Again, this section also requires the Board of Directors to comment on the internal controls and whether there are any internal control deficiency which have been observed by the auditors. If yes, what are the steps taken to overcome those deficiencies? This is to be reported. Review of internal controls are mandatorily required to be done by the audit committee. So if any organization needs to maintain the audit committee, then internal controls are to be verified by the audit committee, and the board of directors should also be told about the deficiency which are there in the internal controls. So internal controls should be audited, and the internal control deficiency should be written by the audit committee. Audit committee should comment on the deficiencies. So ultimate responsibility for ensuring appropriate internal controls are in place with the board of directors. Board of directors are responsible to ensure that internal controls are working fine in an organization. Okay, sir, got it. Now, what is the role of audit committee with respect to internal controls? What should audit committee do with respect to internal controls? Audit committee should evaluate the internal control system. Okay, because of course auditor will check whether the internal controls are working fine or not, for sure. But before that, even before auditor is in the organization, the management and the audit committee should ensure that internal controls are working fine. That is the most important thing, guys. Okay, So evaluation of internal controls should be done by the audit committee. Then reviewing performance of statutory and internal auditors. Statutory auditors and internal auditors, what are they doing? What are the observations which they have with respect to internal controls? They should also be reviewed by the audit committee. So if internal auditors are saying that this internal control is weak, your financial control is weak, then audit committee should check whether it is weak or not. Reviewing the adequacy of internal audit function. So how adequate is the internal audit function? Whether internal audit is sufficiently covering the entire internal controls of the organization, whether the report is comprehensive or not. What is the report? Whether the report has got some highlighting factors, some key factors, or internal audit report should also be reviewed by the audit committee. Audit committee should have discussions with internal and statutory auditors about the findings in the audit report. Audit committee is ultimately responsible for all kinds of audit, be it internal audit or statutory audit. So the audit committee should be able to discuss with the internal and statutory auditors about the organization. Reviewing the findings of internal auditors into matters where there is suspected fraud or irregularity, failure of internal control system, or reporting the matter to the board. Any of these matters should be discussed with the internal auditor by the audit committee. Then discussion with the statutory auditors before the audit commences about the nature, scope of audit as well as post-audit discussion. So two kinds of discussion should happen: pre-audit discussion and post-audit discussion. Audit committee should discuss with the auditors to see if there is any major challenge in the audit. Whether it's statutory audit or internal audit, both should be taken care of by the audit committee. Alright, next is internal audit. Okay, now we are done with internal controls. Now we start internal audit. What do you mean by internal audit? We discussed internal controls, now we'll discuss internal audit. Now we discuss internal audit. What do you mean by internal audit? That's what we are going to discuss now. So what is internal audit? What is internal audit? So internal audit is just like your class teacher. So you remember your 12th standard. When you were in your 12th standard, you had a class teacher who used to take your mock test, who used to take your pre-boards, Hello, yes. So school takes all these things to ensure that you score well in your examination. School or your class teacher or your school takes all these steps to ensure that you do well in your examination. And CBSE is the organization which takes board, right, which takes your board examination. Now class teacher will ensure that you are studying fine. You are giving mock test, you are giving pre-boards, you are giving unit test, you are giving class test. Your class teacher will also be, will also take care of the way or the process you are studying in. Okay, process of your studies. Whether you are good in your extracurricular activities or not. Whether you are waking up on time or not. Whether you are eating healthy or not. So your class teacher is not only bothered about the ultimate results, that is your marks. The class teacher is also So now let me tell you the difference between internal audit and statutory audit. So your class teacher is not only bothered about your score, is not only bothered about your ultimate result, but is also bothered about the process through which you are obtaining your ultimate result. What is the process? Process means, are you eating healthy or not? Are you sleeping on time or not? Extracurricular activities, are you engaging well or not? Is your mental health good or not? All these things are also taken care by the school and the class teacher. But boards, CBSE is only bothered about your marks and nothing else. They are just bothered about your marks. They don't take care of your anything else. The process through which you have obtained these marks, they are not bothered about it. They are just bothered about your marks. So what is internal auditor? Internal auditor is just like a school or a class teacher. Internal auditor will not only focus on the financial statements, but will also see how are these financial statements prepared. The internal auditor will also see what is the process through which you have prepared your financial statements. That is the internal processes of the organization, whether internal processes of the organizations are working fine or not. Is there any leakage in the internal system? Is control system effectively working or not? If transportation is happening in your company, whether that transportation cost can be reduced, this will be a highlight of the internal auditor also. Internal auditor would want to know whether all the systems which are there, or whether all the processes, all the operations which are there in the organization, whether they are working to the best of their ability or not. This is the role of the internal auditor. However, statutory auditor, external auditor is only bothered whether you have prepared your financial statements correctly or not. Whether all the compliances, the legal compliances, whether they are done on time or not, TDS is deposited or not, income tax is deposited or not, that's it. They will not check your internal processes. They will not check your internal, methods of doing things, whatever you have done to create your financial statements. They will not check that. Their ultimate goal is to check whether your financial statements are prepared well or not, whether your, your books of accounts are prepared perfectly or not. That's it. They are not bothered about your internal checks. They are not bothered about your internal processes and procedures. However, internal auditor also checks your internal procedures. So even before statutory auditor kicks in, just like your class teacher will take your mock test, pre-board unit test, this is just like internal audit. We don't want statutory auditor to come inside our organization and point out problems in our organization. So we first call the internal auditor. He will first check the entire organization. He will check in-depth scrutiny he will do of the entire systems which are there in the organization. And then whatever he points out, we will rectify that, and then we will call the statutory auditor. So internal auditor is nothing but a prequel of statutory auditor, just like your class teacher or school does your entire grooming well. They prepare you for the board's examination well. Similarly, internal auditor prepares you for the statutory audit well. That is the role of the internal auditor. Okay, so what do you mean by internal audit? Internal audit is an independent appraisal activity. Appraisal means review within an organization for the review of operations. Now, the only focus of internal auditor is not only on financial statements and the statutory compliances, but the internal auditor is also bothered about the operations of the company. Whether operations of the company are working fine or not, whether operations of the company are going smooth or not. This is also aim of the internal auditor. So internal auditor is bothered about your operations also. It improves managerial control by measuring the evaluating and effectiveness of other controls. So it will improve your managerial activities by seeing whether the control activities are working fine or not, whether controls in an organization are working fine or not. This is also role of the internal auditor. Now, what is the difference between internal control and internal audit? So guys, internal control, I'll tell you a simple equation, okay? Internal control is equal to internal check plus internal audit. So in effect, internal audit is a subset of internal control. Internal audit is a subset of internal control. So internal audit control has two parts. If we want to say that our control is working fine, then we should bother about two parts. One, internal check should be perfect. Rotation of duties, segregation of duty, that should be perfect. And it should also be verified by an auditor. That auditor is saying that yes, they are working fine. If we have both these things together, then we say that internal controls are working fine. So internal controls is equal to internal check plus internal audit. This is the equation which you need to remember always. Internal control is equal to internal check plus internal audit. This is an equation which you need to remember always. Okay. So what is internal control? It refers to systems, processes and procedures created by the management to ensure smooth operations achieved in the organization. Then what is internal audit? Internal audit is process of reviewing the internal controls. That is internal audit. Okay. Then purpose, to ensure that work is done correctly and as per company policy, and to ensure that work already done, find weakness or fraud and recommend corrective action. So to check the work already done, that is a role of internal audit. It is a combination of internal check and internal audit. So internal control is combination of internal check and internal audit, and it is an independent review function by the management. Timing of checking, internal check happens all the time. While the work is going on, the internal check is also happening simultaneously. As the transaction is taking place, internal check is happening simultaneously. Internal audit happens after the work is completed. So it's post-performance. Main objective is to ensure compliance with management policies, and audit, the responsibility of auditor is to ensure that he detects errors, frauds in the system. Scope, internal control is broader in scope, narrower. It is part of overall internal control system. So internal audit is narrower, internal control is a broader spectrum, because internal audit is equal to internal control is equal to internal check plus internal audit. So internal audit is narrower in scope, internal control is broader in scope. So this equation you need to remember always. This equation is very, very important. Internal control is equal to internal check plus internal audit. That is an important equation to be learned. Okay. Now let us delve deep into internal audit. Why is internal audit required? Because guys, we think that everything is working fine, right? We think that everything is working fine, and to bust this myth, internal audit is required regularly. So every management thinks that, oh, my management style is the best and I'm doing best for the company. And the way I am controlling the company, no fraud, no error can ever come in the company. Every management thinks in this way. Every management has got this philosophy. Every management has got this thought process that whatever I'm doing in the company is the best. Every management has got this philosophy, right? But that is not true. Unless and until the internal controls and internal checks which are employed by the management runs the test of internal audit, they are not proved correct. So internal audit should happen very frequently, at least once a year, and internal audit should really test whether internal checks and controls are working fine or not. So necessity of internal control is it improves internal controls. Internal audit is required to improve internal control and identify weaknesses in the system. It detects errors and frauds. It detects misuse of resources like assets. Assets are not misused. It ensures that. It improves the processes by highlighting the weaknesses in the processes. It ensures that the processes are improved. Internal audit checks the books of accounts. Books of accounts are checked in detail by the internal auditor, whether books of accounts are working fine or not. They are being checked by the internal auditors. Then Vigile by internal auditor team keeps operating staff on toes for keeping books updated. So if there's internal audit which is happening every quarter, then the books of accounts, the books which are kept by the staff, they will ensure that yes, books of accounts are kept on time. Their books of accounts are kept up to the rate, because they know that internal auditor is coming. So it's just like a fear which is there in the staff that yes, internal auditor is coming. So please keep your books of accounts and documents updated. Independent review of operations of the business. Companies which are mandatorily required to appoint the internal auditor. So guys, let me tell you, for statutory audit, it's mandatory for all the companies. Whether company is earning 1 rupee, 10,000 crore rupee, whatever. If it's a company registered under Companies Act 2013, statutory audit is required for every company. But internal auditor is not mandatory for every company. Internal audit is mandatory only for select companies. But yes, it doesn't stop the other companies also from voluntarily opting for internal audit. And it's always good, guys. Every company should opt for internal audit, because internal audit is for their own benefit. Internal audit report is not given to Government of India. There's no reporting which is required for internal audit. Internal audit report is given to the management itself. So there's no harm in getting internal audit done. So every company, according to me, every company should enter into internal audit, whether it is mandatory for them or not. Of course, the companies for which it's mandatory, they have to get it done. But for the companies which are for whom the mandatory provisions are not there, even for those companies, internal audit should be done. Internal audit should be done mandatorily. That is the requirement that should be done according to me. So as per Rule 13 of the Companies Account Rules 2014, following companies are Shall be required means mandatorily required to appoint the internal auditors. Number one, listed company. Yes, the companies which are listed in stock exchange, National Stock Exchange or Bombay Stock Exchange or wherever. If it's a listed company, even if they are earning 1 rupee turnover, it's mandatory to get their internal audit done. Internal audit is mandatory for a listed company. So for a listed company, internal audit is a mandatory function. Then for unlisted public company, first of all, you tell me what do you mean by a public company. You guys tell me what do you mean by a public company. Write in the chat box. I want to know what do you mean by public company. What is a public company? A company in which government holds some substantial shareholding. Public company. What is a public company? I want to know what do you mean by a public company. In the chat box. So for a public company which is unlisted, if paid up share capital is 50 crores or more of the preceding year, or if turnover is 200 crores or more of the preceding year, or there are outstanding loans and borrowings more than 100 crores for the preceding year, or there's an outstanding deposit of 25 crores or more at any point during the preceding financial year. If any of these 4 conditions are satisfied, then unlisted public company must get its internal audit done. I have not got the answer even now. Huh? You don't know what is a public company. CMA final students who are giving group 4, who have studied law in their group 3, who have studied law in their group 1, who have studied law in their CMA foundation, they don't know what is a public company. This is surprising. Quite surprising, huh? You don't know what is a public company. No one knows what is a public company. Which have public money invested in that entity. Okay. Any other answer? Any other government related answer? Okay, so this answer is very correct, that any company which has involvement of public in their system, like they have invited borrowings from the public, they have invited debentures from the public, or they have invited deposits from the public, then that company is known as a public company. Now the mistake which mostly students do is that they tell me that so public company is the company where government has more than 50% stake. That is not true. That is not a public company. It's a subset of public company which is a government company. That's definition of a government company. That's not definition of a public company. So public company means where public are substantially interested. That's it. And public includes government also. So please note that definition of public company, you should never state that company in which government are substantially interested. That is not a public company. You should always refrain from giving such answers. So paid up share capital is 50 crores or more, 200 crores or more is the turnover of that company, or outstanding loans are more than 100 crores or more, or deposit of the company is more than 25 crores. Either of the 4 conditions are satisfied, then it is known as a then it is required to get its internal audit done. And for a private company, turnover should be 200 crores or more, outstanding loans and borrowing should be more than 100 crores or more. Either of the two conditions are satisfied, then internal audit is mandatory. But what is my recommendation? My recommendation is every company should get its internal audit done. Every company. So persons eligible to be an internal auditor, who can do internal auditor? Now the question is, who can do internal auditor? Like cost audit can be done only by CMAs, stat audit can be done only by CAs, tax audit can be done only by CAs, secretarial audit can be done only by company secretaries. Who can do the internal audit? Guys, there is no statutory requirement who can do the internal audit. Even the employee of the company can do internal audit. In internal audit, there is no statutory requirement of a qualification. A chartered accountant can do internal audit, cost accountant can do internal audit, company secretary can do internal audit, even a graduate can do internal audit. There is no statutory requirement of a qualification to do internal audit. Internal audit may or may not be done by the employees of the company. Internal audit may be a CA, CMA, or any other professional. Anyone who has knowledge of becoming internal auditor, because the rule did not define the word any professional in its purview. So even an MBA can do internal audit. Internal audit can be done by anyone. That is the important thing. So do you think that CMAs can provide an edge in internal audit? Can CMAs provide something extra in internal audit? Can CMA provide something out of their experience, out of their expertise in internal audit? Answer is absolutely yes. CMAs are qualified to analyze cost, process costing, of an organization. CMAs are professional in doing budgetary control, standard costing, management accounting. Using all these techniques, CMA can very well analyze the process of a particular organization, and they can value add in any organization using these processes, using this knowledge which CMAs have. So CMAs are the best people to conduct the internal audit for any organization. CMAs are the best people. There's no better professional than CMA who can do internal audit of an organization, because they are well versed with cost control techniques. They are well versed with process improvement. They are well versed with budgetary control techniques. They know how to improve a process. They know how to reduce cost. They know how to induce efficiency in capacity determination. They know all these aspects, and these aspects are key to internal audit. So yes, CMAs can prove to be really efficient in internal audit. So to assist board in identification, monitoring and management of the business risks, to evaluate operational efficiencies and productivity, wherever productivity can be increased, efficiency can be increased, CMAs can play an important role. Evaluate organization culture and ethics. Whatever is the organization culture, they can evaluate it and contribute to it. Check compliance with laws and regulations. Whatever laws and regulations are there, CMAs can check the compliance, and they can suggest improvements in law and regulations. Safeguarding the assets, how to check whether the assets are being sold on time or not. All these checks and balances can be put in by the CMAs. To evaluate performance management control system, how to evaluate performance management and how to control the performance management, this can be done by CMAs. To develop internal audit strategy, optimizing risk, optimizing cost, optimizing value. So cost optimization is definitely the forte of CMAs. CMAs do this cost optimization all the time. The CMAs can optimize the audit operations also, and it can support the business process improvement, re-engineering, good corporate governance can be supported by CMAs. So yes, CMAs can definitely prove to be pivotal in internal audits. If you give internal audit to a CMA, he can definitely value add to the company. He can definitely give you insights on how the company should develop and improve the cost efficiency, improve the working of a particular organization. Everything can be given by the internal auditor. So as internal auditor can really contribute. CMA can contribute as an internal auditor. Now next is audit program, and yes, we have already studied a brief about audit program in our last chapter. What is audit program? Audit program is plan of the audit, how the audit will be conducted. Audit program is the plan of audit. How will the audit be conducted? How many resources are required? How many days are required? What area will be undertaken? What steps will be taken to audit a particular area? All these things will be studied in this particular audit program. It will be written in the audit program even before the audit starts. I gave you a very good example, guys. To give your examination, you need to plan that I have the month of October, I have the month of November, December is my examination. So what should I do in October? What should I do in first week of October, second week of October? What should I do in November? What should I do in December? So all this planning needs to be done carefully. And this entire planning is known as audit program. So audit program is nothing but planning of your audit. If planning happens appropriately, then audit plan is developed carefully. If audit plan is developed carefully, audit goes well. So what is audit program? Audit program is nothing but a detailed plan of how the auditing work is to be performed, what are the procedures to be performed, and what is the timing and resources which is required. How much time is required to complete this audit, and how many qualified cost accountants are required, how many articles are required, how many interns are required, how many partners are required. All these things required to be studied during your audit program. So planning is done by these three activities. Now, what are the advantages of audit program? What are the benefits of audit program, creating audit program? First of all, it creates a checklist so that nothing is remained out of purview. Okay, what all processes are required to be done? What is critical? So nothing is left. If audit checklist is there, then nothing is left unaudited. Nothing is left unaudited. So there is no area which is left unaudited. Everything is audited. That is ensured by the audit checklist, which is created in the audit program. So checklist is to be created in the audit program, and nothing is left unaudited. That is ensured by audit program. Next, work can be properly allocated to responsible people. Okay, if we know what is to be done and how many articles are there, how many qualified cost accountants are there, then we can allocate the work according to their expertise, according to their knowledge, right? So allocation of works becomes easy. Then we fix individual responsibility, of each person, that you have to do this work, so you are responsible for this work, you are responsible for this work. So the responsibility is allocated according to the level of the person, and also what kind of responsibility was given to him. Accordingly, the responsibility can be fixed. Auditor may easily know the extent work to be done at any point in time. Auditor will be able to control that, yes, this work has been done, this work is left over. So this control is there in the auditor's hand if audit program is prepared well. So progress of work done can be supervised by the auditor. Then uniformity of work can be attained as the same program would be followed from time to time. So uniformity of work should be there. Every year same audit procedures at least should be followed. Nothing should be left over. So you prepare audit program for 1 year, it will form as a basis for the next year. Next year also you can use the same audit program with minor modifications. Okay, so this is how you create uniformity in your work done. It is useful basis for planning the program for the following year. Yes, for following year, whatever program you need to make, it can be used as a basis. It may be used as an evidence by the auditor in the event when his charge is brought against him. So if someone asks the auditor, what have you done in your entire audit? You can show the audit program, I have taken these steps. I have done all these steps. In a summary, he can tell that I have done all these steps. So it can prove as a evidence of what work has been done by the auditor if audit program has been created on time and absolutely perfectly. Now there are some disadvantages of the audit program. Obviously, if audit program is there, then there are some disadvantages also. So if you give a plan to someone, then that person stops applying his brain. He stops applying his brain. He would just do whatever you say. I'll give you an example, okay? My mother always tells me that, go to market, go to that standards shop and bring this useful grocery items and household items to me. I go to the shop, I bring the grocery items to home. That's it. It's a mechanical process because my mom instructed me to go to the shop, bring it and bring it to me. However, if my mom doesn't instruct me so strictly, if my mom says, okay, I want this, I want tomatoes, you please go to market and fetch tomatoes, then I might go to 3 shops and I see which shop is the best, where quality is good and price is less, and I will take the tomatoes from that particular shop. And if my mother strictly tells me, no, go to that shop and bring tomatoes, then maybe I'm bringing costly tomatoes at lesser quality. So audit program also has this disadvantage that if you tell someone that you have to do 1, 2, 3, 4, 5 things, then he will only do 5 things. He will ignore the 6th thing which was necessary. He will not apply his brain. If you tell someone that, follow the audit program, he will not apply his brain. He will not, think radically and rationally. That is the first disadvantage of audit program. Task becomes mechanical and the auditor may lose interest and initiative. Auditor might not do something new. He'll say, okay, let's do whatever is written in the audit program. That's it. We don't apply our brains. Sometimes it becomes monotonous. Drawing up a audit program may be unnecessary for small concerns. If it's a very small concern, if it's a very small entity and only one staff is doing audit of the entire concern, then the audit program becomes irrelevant. It becomes unuseful. Though audit program helps in fixing responsibility, but inefficient staff may defend themselves by stating that matter was not contained in the audit program. So sometimes when audit program is there, then the inefficient staff who know that we need to do something extra also, he might say that no, it was not written in the audit program, so I didn't do it. So audit program acts as a shield to not doing something also, because something was necessary and you know that something was necessary. You will ignore it and you will say audit program did not have this mention. They will not state the obvious. They will not say that, okay, this was obvious that this had to be done. They will not, acknowledge that fact. So sometimes the audit program, it fixes responsibility, but inefficient staff may defend themselves by saying it was not written in the audit program. Rigid audit programs cannot be led for each type of business. So, rigid audit programs are never good for organizations, for all kind of organizations. If we make one audit program, it is not applicable for all the organization. Every organization has a different audit program. So, you cannot standardize any audit program. Audit program always should be flexible and dynamic. That is one of the problem of audit program. So, these are the lacunas or disadvantages of audit program. Now, there are 2 kinds of audits: continuous audit and final audit. Okay, continuous audit means audit which goes on during the year itself. For example, internal audit or concurrent audit. So internal audit and concurrent audit goes on during the tenure of the audit, during the entire year. The concurrent audit or continuous audit goes on, internal audit goes on. So that's a continuous audit. And statutory audit, cost audit, these are examples of final audit. It happens once and for all after the year is over. It happens once and for all. Okay, final audit. That's the examples of continuous audit and final audit. Now I'll discuss what do you mean by continuous audit and final audit. So continuous audit means it involves 100% checking of all the transactions like an internal audit. However, in final audit, there is only sample basis checking. Entire thing cannot be audited in final audit. Next, it is carried on continuously throughout the year. The continuous audit is carried on throughout the year. Entire year, all the months, the continuous audit will be carried on. However, final audit is only carried out after close of the financial year. When the financial year is closed, after that the final audit is carried on. It is commenced and carried on before the close of the financial year to which it relates. So it is commenced and carried on before the close of financial year also, but the final audit commences and carried on after the close of the financial year. After the close of the financial year. This is before the close of the financial year. It is after the close of financial year. It is constant engagement of the auditor's staff in the client office throughout the period. However, this is only a year end, a few months post year end. So the final audit happens only after year end, only for few months, 2 months or 3 months. However, continuous audit happens throughout the year. Every month the auditor is sitting inside the office of the client. Continuous audit is suitable in cases where financial accounts are desired to be presented soon after close of the financial year. So if your financial statements are to be, final accounts to be submitted immediately after the close of the financial year. So for example, 31st March is the close date, and on 5th April you want to present your financial statements to the board of directors. Then you need continuous audit. Because if you call the auditors on 1st of April, they will not be able to audit up till 4th of April. That is not possible. So if you want to have final accounts released so early, then you have to employ continuous auditor only, who will audit month by month. Financial statements are finalized late as the audit concludes post end of the financial year. So final audit is always done late and it is always post the completion of the financial year. Continuous audit provides an advance notice on the irregularities and hence corrective actions can be taken on time. So since continuous audit is happening during the year, then any irregularities, any problems in the audit is highlighted at the very first time only, at the initial time only. Errors and faults are detected after the year end, so they are detected late. Okay. Then example is bank audit, concurrent audit, even internal audit. An example of final audit is tax audit, GST audit, stat audit. Stat audit is also an example of final audit. Cost audit is also example of final audit. Cost audit. Okay. Cost audit is also example of final audit. So this is the difference between final audit and cost audit. Okay. Now we come on to working papers. Working papers means, when you are doing audit, then you need to maintain some file where all the documents are kept for that particular, that particular client. So you please tell me, all of you, please tell me in the chat box, what kind of working papers have you seen in your audits? You must have done some audits, right? In your articleship. So whatever audits you have done in your articleship, you please tell me in the chat box, what kind of working papers have you seen in the audit? So what do you mean by working papers? Working papers mean documents that are kept in the audit files, the documents which you maintain in the audit file, which proves that you have done some audit. Working papers which you have, carried on, which you have collated during the audit, that is known as the working papers. Now, working papers can be kept in two kinds of file, permanent audit file and current audit file. There are two kinds of audit files. None of you have seen any document during audit, huh? No answers. Have all of you done dummy articleship? You have not seen working papers. You are not aware about working papers. What are working papers? You are not aware about that. I am, sir. So tell me, what working papers have you seen? If you have worked in some audit, then you tell me what kind of working papers have you seen? What are working papers in case of an audit? Tell me that. Dummy, yes, you are the dummy only. That I know. So some students only go for audit for eating food, lunch, dinner, that's it. Because audit companies give a lot of good food, no? So some students go for audit, and I have heard this from many students. That's why we go for audit only for eating lunch, good breakfast, and then come back in the evening. That's it. Okay. So what are the working papers? Working papers are the documents that evidences that you have done this kind of work in your organization. Okay. And two kinds of files are maintained. One is the permanent audit file, one is the temporary audit file. What is the permanent audit file and temporary audit file? So permanent audit file contains documents which are required every year, like memorandum of association, article of association. These documents are required in every year's audit, be it audit of 25, 26, 26, 27, 27, 28. All the year's audit, these documents would be required, like memorandum of association, article of association, long-term rent agreements, long-term revenue agreements. So these agreements or these working papers are required every year. Okay, so these are kept under the permanent audit file, which will be carried to audit every year. And second is the current audit file. Current audit file will contain working papers of the items which are used only in 1 year. For example, you have done expenses during the current year. Okay, repair maintenance expenses are there. You have working paper of those repair maintenance expenses. They will be relevant for this year only, because next year new set of repair maintenance expenses will be done. Okay, so things like vouchers, things like expense invoices, they are individual to each year. Each year there will be different invoice. Each year there will be different expenses. So that working papers will be kept in the current audit file. So permanent audit file and current audit file. Sample selection, current audit file. Again, you selected sample to test any expenditure. This will be in the current audit file. Yes, sample selection will be in the current audit file. So it depends what kind of documents are there. According to the documents, your file will be decided. So permanent audit file, the working papers which are required for more than one current period, more than one accounting period, the documents which are required, they are for the permanent audit file, they are kept in permanent audit file, like MOA, AOA in case of a company. And the documents which are required only in one accounting period, that will be kept in current audit file, like the correspondence related to acceptance of annual reappointment. Annual reappointment is happening and correspondence is there to accept it. Every year this will happen. So every year's acceptance will be different. Extracts or copies of legal documents, agreements, minutes of meetings which are relevant to audit, all these are kept in permanent audit file. So long-term agreements. Okay, long-term agreements. Yes, ledgers, bank statements, very good. SOPs. So SOPs are recurring. They are put in permanent audit file. SOPs are in the permanent audit file. Screenshot of SAP, current audit file. Ledgers, current audit file. Bank statement, current audit file. But SOPs are to be kept in the permanent audit file, because SOP remains same for every year. Okay, so that is very good. It is very apparent that Ajay More has done good audits and he has been part of big audits. It is apparent. It is very, very apparent. Very good, Ajay More. Very good examples you have given. No other student has been able to give good examples. Very good. So as extracts of important matters in the meeting, board meetings happen every year. So the board meeting minutes will be kept in current audit file. General meeting also happens every year. It will be kept in current audit file. Record of study and evaluation of internal controls, whether internal controls are working fine or not. This evaluation is used every year. So it will be in the permanent audit file, because it will be used once it is used for every year. Copies of management letters are created every year. Different management letter will be created. So it will be kept in current audit file. Analysis of significant ratios and trends. Whatever trends are there for past years, this can be kept in permanent audit file. Analysis of transactions and balances in the current audit file. Audited financial statements of the previous years, they should be kept in permanent audit file. Copies of communication with auditors, this happens every year, so it will be kept in current audit file. Notes regarding significant accounting policies, whatever policies are there, the notes regarding the policies, this should be kept in the permanent audit file. Audit program is to be kept in the current audit file. I am in internal audit team. Very good, Ajay. Very good. Internal audit is a very good area and teaches you a lot. So very good. Significant audit observations of the earlier years can be kept in permanent audit file, and conclusions reached on significant aspects in the current year shall be kept in the current audit file. That is the difference between current audit file and permanent audit file. Now, one very important thing which is to be noted is working paper is the property of the auditor, and only auditor has the right to access working papers. And auditor, if he wants, then he can share the working papers with the client. Client cannot force auditor to share the working paper with him. So working paper is property of the auditor. If auditor thinks that yes, I want to share the working papers with the client, then he can do. If he doesn't want to share the working papers with the client, the auditor can say no, I am not sharing working paper with you. So working paper is property of the auditor. That's very important principle which you need to learn. The portions or extracts of which can be had at its discretion. These working papers should be kept in safe custody and in confidential manner for such time as is sufficient to meet the requirements of related legal and professional requirements. So working papers should be kept safely for some time to meet the legal and professional requirements. What is audit notebook? Audit notebook is a book which is usually bound book. It's like a diary, it's like a pad where all your significant findings are recorded. I'm not having any pad right now. Okay, this can be an audit notebook. So this can be an audit notebook. Something like this can be an audit notebook. Kind of a pad where you record all your findings of your audit. All the findings of the audit should be written in this notebook. This is an audit notebook. This is known as an audit notebook. Whatever findings you have during the audit, you will write them down in the notebook. This is known as the audit notebook. It's usually a bound book in which large variety of matters are observed during the course of audit are recorded. So we will record everything that we observed during the audit. We will write it down in the audit notebook. Audit notebook is permanent record of the auditor. For each individual audit, auditor usually maintains separate audit notebook. Contents of audit notebook may be name of business enterprise may be written, organization structure. While the management is explaining you the structure of the organization, you can note down the structure in your notebook. Important provisions of memorandum association, articles of association, you can write down in the notebook. Communication with the previous auditor, you can write down with the notebook. Management representation letters, list of books of accounts which are maintained by the client can be written in the notebook. Accounting methods, internal control system, everything should be written in the notebook. Key management personnel, who are the key people who are handling the accounts and maintaining the finances, their names should be written in the notebook. Errors and frauds discovered, whatever error and fraud is discovered, written in the notebook. Matters requiring explanation. So anything you can write in the notebook. An audit notebook is also a evidence that you have conducted audit. You have conducted audit, the evidence is internal audit notebook. Okay. Then audit engagement letter. Engagement letter, you are very well aware of that, it's a contract between two parties, specifically stating what is the scope of audit, what is the risk and rewards, what are the liabilities of the auditor, what is the fees of audit, what is the period of audit, what is the name of the company for which it is being audited. So it's a written agreement between the auditor and the client, clearly demarcating what kind of audit needs to be done, what is the fees, what is the scope, what is the year for which audit is done, which all departments will be covered under audit. Everything is written in the engagement letter. Very, very important document. From an exam standpoint also it's important. It is the contract or agreement with the client. It is starting point and oftentimes the closing point of any relationship. And audit engagement letter is to be given by the auditor to the company, explaining scope of work, duties, responsibility of the auditor. So what is the constituents of engagement letter? Engagement letter should first of all have the objective and scope of audit. So things like what is the type of audit? What is the type of audit? This is written in the engagement letter, whether it's internal audit, it's cost audit, it's statutory audit, it's procedural audit, operational audit. What kind of audit is it? That is written in the engagement letter. Auditor's responsibility. What is the auditor's responsibility? You please tell me in the chat box whether financial statements preparation is also auditor's responsibility. So suppose if client gives you trial balance and tells you that auditor, you please prepare the financial statements, or you also audit the organization, the financial statements. Will you do it? Is preparation of financial statements responsibility of the auditor or the client? That's my question to you in the chat box. Who should prepare the financial statements? The auditor or the client? Who should prepare the financial statements? The auditor or the client? Any other answer? Who should prepare the financial statements? No, client. Very good, very good. So auditor should clearly write that I am not going to prepare the financial statements. Preparation of financial statements and installing internal controls is responsibility of the management. I'm just going to give my review. I will just give my opinion on the financial statements. So that should be stated in the auditor's responsibility statement. Then management's responsibility. What should management be doing? What are the important key things that management is expected to do? All these things are to be written in the management responsibility. Existence of internal limitations of audit. Audit is based on sampling. So there might be some entries which might not be checked by the auditor. All these things should be written in the existence of limited controls. Management representation letters. So sometimes auditor is not able to check everything. So for many things, the auditor also takes a management representation letter that yes, you write it in the writing that all the transactions have been recorded completely in the books of accounts. So such kind of representation letter is to be taken from the management. Restrictions and limitation of auditor's liability. So monetarily, what is the maximum amount that auditor might need to face if the audit is done? Is there some error in doing audit? What's the monetary liability of the auditor? That needs to be written. Basis of computation of audit fees, how is audit fees computed? Form of report, what kind of report is required to be given by the auditor? Validity of the report, who can use the report? Okay, whether it can be used by statutory authorities also. Need for use of services of an internal auditor or any other expert may arise during the course of audit. So if you need any expert, like if you need any actuary during course of audit, or you need any valuer in course of audit, then that also is to be stated in the engagement letter that yes, it is a statutory audit, but we will require a actuary to value our provision for gratuity and retirement benefits. We need a valuer to value our fixed asset. This should be written in the engagement letter. Auditor's responsibility is to examine financial statements. Very good statement. Auditor responsibility is to examine the financial statements. Preparation of financial statements is responsibility of the management. This should be written. Okay. Then limits on submission of report to other authorities. If auditor doesn't want its report to be circulated publicly, it should be written in the engagement letter itself that auditor is wanting that your audit report should be used only by the management of the company and not by anyone else. That is the requirement which can be given in the engagement letter itself. Then what do you mean by operational audit? Guys, operational audit is again a very small part of internal audit where the focus is only on the operations or the processes which are undertaken by the management. Whether operations are fully optimized or not, whether the operations are fully efficient or not. So in operational audit, the auditor will not check about the compliances, about the statutory provisions, whether the financial statements are prepared well or not. No. Focus is only on the operations, the processes. That is operational audit. So operational audit, it concentrates on seeking out the reduction of waste and inefficiency and excessive cost in the operations. So the prime focus is operations in operational audit. Statutory compliance is not the prime focus. TDS deposit is not the prime focus. Income tax deposit is not the prime focus. GST deposit is not the prime focus in operational audit. By the introduction of improvement of operating controls, it is audit of performance at mainly operating level like supervisory level. Operational audit is sometimes defined as extension of financial audit. It is just an extension of financial audit. So what will be the difference between internal audit and operational audit? What will be the broad points of differentiation? Okay, so points of differentiation between internal audit and operational audit is internal audit is more related to compliance. Okay, even with statutory regulations, statutory compliance or regulatory compliance. Internal audit is also focusing on that. But operational audit is focusing on risk identification and process improvement. Operational audit doesn't concern with statutory compliance, whether TDS is deposited or not under purview of operational audit. Okay. Internal audit, financial accounts, policies and procedures is the focus. And the focus is business as a whole, risk management is the focus, that operations are working risklessly. Aim is financial audit, ultimate aim of internal audit, and operational audit focuses on efficiency and improvement, basically process improvement. Basically process improvement. Based on financial transactions, so internal audit focuses on financial transactions. Operational audit focuses on the processes of business, internal processes. Monitoring, it monitors costs center-wise. Budget monitoring is there in case of internal audit. Operational audit, it focuses on performance and result monitoring, whether performance of operations is fine or not. Thrust is policies and transactions and compliance is done in the business. And thrust of operational audit is that whether goal, strategies and process risk management is done appropriately or not. That's a broad difference between operational audit and internal audit. It has come in 2022 recently. Okay. And now a different chapter which is in your book. If you see CMA Institute book, it is given as a different chapter. I have included as a part of internal audit and operational audit because it is nothing but extension of audit. Okay, so the question is, how will you audit any educational institution? How will you audit? What are the steps that you will take to audit any educational institution? That is the question which is to be answered in this particular concept. So I have merged these two chapters. These are given separately in your books, in your cost audit books, but I have merged both of these chapters. And to learn both of these chapters, I have created some amazing charts which you can refer to, and easily you will be able to understand this chapter well. Okay, I have created some very useful charts for you. Steps in audit process of various organizations. So there are very, very detailed organizational steps which are there for auditing various organizations, but I'll tell you some way in which you can learn one of the audit steps, and all the audit steps will be learned by you. Yes, very easy method of learning all the service organizations audit. But yes, you have to read all of them, but this is the prime format in which you will be doing the your learning. Okay, now in Indian society, usually biodatas are created, right? And whenever any marriage proposals are given to girls or boys, then you ask for their biodatas. And what you look for in your potential, your potential groom or your potential bride, whenever we look for a potential groom or potential bride, what do we look into? The biodata. So this is the kind of biodata which you expect, to be exchanged. The name of the guy will be written, his date of birth, his time of birth, place of birth, height, what does he do, what is the mother tongue, religion, everything will be given in this kind of a biodata. Okay, biodata is exchanged during the marriages, right? Now what are the things that girls see in a guy and a guy sees in a girl? So what are the things? Okay, now things will be background. What is the guy's background? Background means what is the religion or caste of the guy, what is his education qualification, what is his family occupation, what does the family do, whether he is smoking, eating habits, okay, whether he smokes or not, whether he eats non-veg or not. If you are a vegetarian, then you will seek a vegetarian boy. What is his nature and behavior, whether his nature is good enough or not, his behavior is good enough or not, whether he interacts with other girls in a very candid manner, and he invites other girls' profile in Instagram, he chats with other girls or not, whether he is loyal to you or not, whether on LinkedIn he gets invites from other girls with whom he starts chatting, apart from professional work he starts chatting, whether in his office he is surrounded with girls and he chats with other girls in his office or not. All these things you want to know in a boy, right? So these things I categorize into two parts. One is the constitution. Constitution means the background in which the boy is is grown, the conditions in which that boy is grown. So his family, his family occupation, his education, religion, the background in which he is brought up, right? This is related to constitution of that boy, constitution of the boy, okay? And his internal controls, his ethics. These are his ethics, his internal controls of the boy you want to know. These two things you want to know with respect to boys, I'm telling to all the girls out here, okay? Then you want to know his incomes and expenses, okay? What are his sources of income? How much does he earn? What is the quantum of his income? And you also want to know whether he is an extravagant spender or not. Because if he spends a lot, then whatever he earns will be spent in expenses, he will not be able to save. So you want to know two things. You want to know incomes of the guy, and you want to know his expenses, wherever he spends, what is the expenditure habits of that particular guy. You want to know that, right? So this is the second thing you want to know about that boy. Then third is you want to know what are the assets and liabilities which are there with that boy. Does he own any flat? Does he own any property, asset owned by that guy? And whether he has some loans, whether he has some mortgage, whether he has some liabilities which he need to fulfill, whether any loans he need to fulfill, you want to know that also. So in nutshell, you want to know these things about a particular boy. Similarly, by auditing any organization, we want to know these things about the organization also. Yes, organization is equal to boy. We want to know these things about the organization also. We want to know the constitution of the organization, whether it is a company, whether it's a partnership firm, whether it's a cooperative society, what are the bylaws, what are the rules and regulations of that company. We want to know its constitution. We don't want to know its internal controls, whether the company is very well equipped with internal controls, whether it has internal controls which are working strongly or not, whether the bylaws of the company are working fine or not, whether the policies are being followed or not. We want to know that. Internal controls we want to know. Then we want to know about the incomes and expenses of that particular organization. Then finally we want to know the assets and liabilities of that particular organization. Broadly, we want to know these 3 things about the organization. Actually, 4 things, because first one is divided into 2 parts. So in every answer that is asked in the question, in the examination, you should answer these 4 parts about every organization. What is the constitution of the organization? What is the internal controls of the organization? What are the incomes and expenses of the organization? And what are the assets and liabilities of the organization? These 4 questions you need to answer in every question, in every audit. You need to answer these 4 questions. I'll give you an example. So suppose if you are asked to audit an educational institution, school, college, or any coaching institute, you are asked how to audit, what are the things that you're going to see in an educational institution, what are the things that you're going to see in an educational institution. If this kind of question is asked in the examination, that first you need to see what is it the constitution of that particular organization, what are the internal controls which are there in the organization, like the trust deed which has been created for that organization, the charter of understanding of that particular organization. In case of a company, it should be memorandum of association, articles of association. Then it's bylaws. Bylaws means what are the rules and regulations framed around the organization. You need to know that, because usually a school is created under a trust. It's not a company. It's a trust or a cooperative society. So it cannot have MOA, LOA. Please don't write MOA, AOA over here. It cannot have MOA, AOA over here, because it's a school. School is never a company. Next, minutes of meeting of the managing committee and internal control system. What is the internal control system? Then you want to audit the incomes which are there. And what are the incomes of a school? Student fees. Fee register needs to be tallied with receipts, needs to be tallied with accounts. Fee register is there, receipts are there. You should tally fee receipt and register, and you can tally it with the accounts whether student fees is recognized properly or not. If there's any advance fees which is given by the student, many students deposit fee for the entire year together. If there's any advance fee which is deposited by the student, whether it is carried forward in the next year or not. Okay, then irrecoverable fees, whether it is written off or not, and whether approval is there for the writing off of that fees or not. So proper approval should be there for writing off any fees. Approval should be there for writing off of irrecoverable fees. Then fee waiver, if any scholarship is given, and if any fee waiver is given, then again approval should be there for any scholarship which is given. So for any needy student, for any student which are below the poverty line, okay, if any scholarship is given for those students, whether approval is given for that scholarship or not. For donations and admissions, it is credited to the capital fund. Donations and admission fee should be credited to the capital fund and not to the revenue fund. That should be taken care of. Then other income of a school, fine for late payment, recovery of hostel due. If hostel is provided, then hostel income will also be there. Refund of caution money, you will refund the security deposit of the caution money. Endowment money and legacies, any endowment money is there, legacies are there, or any grants are there, then all these incomes should be taken care of. All these incomes should be recognized in the books of accounts properly for an education institution. Now, what kind of expenses will you expect a school to incur? Expenses will be establishment expenses like repair maintenance, like groceries, like other normal school expenditure. Establishment expenditure will be there. Then salaries will be there to staff, PF money of staff. Okay, school teachers will be paid their salaries. This should be expenditure of that particular school, etc. Capital expenditure will be there. Fixed assets are purchased and investments are purchased. So for the capital expenditure, you should see that proper vouchers are there and verification is there. Proper approval is there. Any chair, table or desk is purchased, then approval of the managing committee should be there. Approval should be there. Depreciation should be given as per the policy. That should be checked. And guys, this is common for all the organizations. This is not unique to school. This is common for all the organizations. All the organizations have capital expenditure. They will seek approval and depreciation as per the policy should be given. This is common for all the organizations. Then we talk about liabilities. We need to verify the compliance of statutory dues, TDS, PF is paid on time or not. Whether loan installments are paid on time or not. If a school has taken some loan from the bank, then whether loan installment, EMI is paid on time or not. Payment for outstanding expenses, whatever expenses are outstanding, are they paid on time or not? All these liabilities should be taken care of. All these liabilities should be, be audited by the auditor. So very simple. You think about a particular organization and just see what kind of income, expenses, assets and liabilities are there in that organization. And you write 1 point for each of them. So your answer will look something like this. Your answer will look something like this. Okay, that chart was there to for your remembrance, so that you remember that chart was there. The answer should look like this. So the special steps involved in audit of education institution are as under: number 1, constitution and internal controls. There should be a trust deed. You examine the trust deed, you examine the regulations, you examine the minutes of meetings, you ensure that internal control system is working fine. Income, you will check the name of the student is there in the student's fees. It should be there in the receipts. Counterfall of the receipt should be checked, cash book should be checked, and finally the fee should be accounted for in the books of accounts. That should be checked by the auditor. Okay, then ascertain that if fees is paid in advance, then it should be carried forward. If the fees is arrears is irrecoverable and written off, it should be after proper sanction, proper approval should be there. If some irrecoverable fees is written off, then proper sanction should be there. Auditor should report old heavy arrear in account of fees, dormitory rent to managing committee. If there's any old fees which is due in the books of accounts, auditor should report it. Check admission fees, and any kind of capital fees should be credited to the capital fund. Then see that free studentship or scholarship is approved, is very well approved, authorized by the relevant person. If some scholarship is given to the employee, then it should be approved by the relevant person. Other receipts, if you have received fine for late payment, that should be accounted for properly. Hostel dues are to be, or caution money refunded should be accounted for, should be audited properly. Rental income for any property which is given on rent, like canteens are given on rent by the school, that should be recorded. Voucher income for endowment and legacies, if any legacy or any endowment is received, like the alumni of the school have contributed something to the school, then that should be checked. Verifying government or local authority grant, if any grant is given, that should be checked. Caution money should be checked, shown as a liability. Voucher donations, if any donations are there, then you should, donation is used for specific purpose for which it is reduced, check that. Donation should be checked properly. Expenditure should be checked properly, that establishment expenditures are incurred and they are recorded in the right head, that should be done. Then ascertain that system of ordering, inspection and on receipt and issue of provision, foodstuff, clothing, equipment is efficient and all bills are duly authorized. Whatever food is ordered, clothing is ordered, any kind of stuff is ordered inside the school, that should be properly authorized, properly should be approved. Auditor should check it. Then increase in any salaries to the staff should be sanctioned by the committee. Provident fund money, everything should be audited. Capital expenditure, you should vouch for capital expenditure. Sanction should be there for capital expenditure. It should be approved by the relevant authority. Conduct physical verification of assets. Physical verification should be undertaken. Inventories should be again checked. Depreciation is to be checked. Properly depreciation. Outstanding liabilities. All the outstanding liabilities is paid on time. Like TDS, PF, also the usual expenses which are due, they should be paid on time. So very easy way to remember all these audit steps. Just bifurcate into 4 parts. Very easily you will be able to remember all these audit steps. Hospital also you will be able to remember, just bifurcate into 4 parts and remember these charts. These charts will come handy to you. These charts will really be effective in remembering all these steps. It will be very, very easy for you to remember all these steps if you remember these charts. And just remember, divide your answer into 4 parts and you will be able to remember all the points of all the service organizations. I know it is difficult to remember all of these and students often struggle while remembering all of these, but using these charts you will be able to remember all of these very, very easily. Very easily, guys. Okay. So yes, I'm not doing each one of them. You can do them yourself by using the charts and the notes. And it will be easy. It will not be difficult for you at all. Okay. Then this entire topic will be done. And remember, at least one of these service organizations are coming in the examination regularly. At least one will come in the examination for sure. At least one of them will definitely come. That is for sure. So please remember all of them, because this will definitely come in the examination. More often than not, they come in the examination. Every attempt they come in the examination. At least one will come in your examination for sure. So very, very, very important from an exam standpoint. And yes, this ends your chapter. Again, past examination questions, MCQs have been given by me at the end of the chapter, which you should do on your own, and you should be well versed with the MCQs and all the past examination questions. And that's it. If you are able to understand the chapter well, if you are able to remember the contents well, you've played the trick. Very simple, concept is simple, Understand it and then you remember it. If you have any questions, you can ask, or we can now end the class and meet tomorrow with a new chapter. Okay, so that's all for this particular session, guys. We'll be meeting tomorrow with our next chapter. Till that time, all the very best and happy studying. Bye bye. See you in the next chapter.